Hi everyone. Okay, so the last set of exercises, exercise 13, 14, and 15. And again, these go together as an income statement, statement of equity, and the balance sheet. Okay, so this one is a little bit more complicated. The reason being is, well, if we look here for the income statement, it's telling us that the check figure, we have a loss. So obviously our revenue minus our expenses, which is what gives us our profit or loss, we must have more expenses than we do revenue in order to come up with a loss. Okay, so let's look at our list. This is also a little bit more complex because they haven't put the accounting order of account. Okay, so for example, our first one is accounts payable, which we know is a liability. Accounts receivable, we know is an asset because we're due to receive this money. Our customers owe us this. Cash is an asset, computer equipment is an asset, furniture is an asset. Brienne Capital, June 30th, 2026. So what that's telling us, let's go back and read the detail. On July 1st, Academic Learning Services entered its second month of operation. So it existed during the month of June. So on July 31st, we want to create the financial records. So we had an ending balance in capital. So in our statement of changes in owner's equity, we had an ending balance June 30th of 15,400. Remember, and it's, as you can see by the asterisk as well, there's a hint down below the list. The ending capital balance for one period is the beginning capital balance for the next period. So that is going to be our July 1st beginning balance. Then we have office rent expense, which is an expense. We have investments, which also goes on our statement of equity. We have withdrawals. We have supplies, which is an asset. We have two types of revenue there, so we're going to have to add those two together. We've got textbook rental revenue, and we've got tutoring revenue. Then we have wages for the tutors, and then the utilities. Okay, so let's go have a look. So again, the best way to do it, that I've seen in the past, students seem to prefer this method, is go through all of your accounts, say what they are, and say what statement they go on. So then as you're creating your statements, you'll know if you've got everything. And then as you're using an account, tick it off the list, put a check mark, put a light line through it so that you know you've used it and you don't accidentally miss one or use one twice. Okay, so let's go look at the solution. Okay, so we've got our income statement for the month of July 31st. We have revenue. We have two revenues, right? Our revenue from tutoring and our textbook rental revenue to give us our total revenue. Then we have the three operating expenses, because if you remember, there were two down here at the bottom, but then there was another one up here, office rent expense. So what they've done, if you have a look at your list, for most of it, it's actually in alphabetical order. Not all of it, but most of it. Okay. So we've got office rent expense, tutoring wages expense, utilities expense, total operating expenses is 7,120. So then we've got revenue of 6,700 minus operating expenses of 7,120 gives us a loss of 420. Statement of changes in equity. So again, we had the beginning balance, which is the 15,400, which comes from the ending balance for June 30th, 15,400. Investments, 3,200. That gives us our total of 18,600 of inputs. We've got withdrawals by the owner of 3,000. We had a loss of 420. So our subtracting from our current equity, we have 3,420 to give us an ending balance for our equity of 15,180. Okay, 15,180. Then we come to our balance sheet. Again, we go through our list in our question to make sure we've got all of our assets. And if you have a look as well, you can see the check figure from the ending capital of 15,180, which is what we got. And you can see on our balance sheet that we need total assets of 17,680. And if we go over, we've got our cash, accounts receivable, supplies, furniture, computer equipment for total assets of 17,180. We had our accounts payable of 2,500. We have our equity, which comes from our statement of equity, the 15,180. We add that with our liability to give us our total liabilities and equity of 17,680. And we balance. Let me know if you have any questions, okay? Thanks, everyone.